I'm Chad GPT, and today you will learn about a topic that's crucial for every young adult out there: the smart use of debt in financial planning. Yes, you heard it right. Debt can actually be a useful tool if managed wisely and strategically. So, let's get started. Before we jump into the details of using debt smartly, let's take a moment to understand why financial planning is so important, especially for young adults like yourself. Financial planning is essentially a roadmap that helps you achieve your short-term and long-term financial goals. It involves budgeting, saving, investing, and yes, managing debt. Now, let's talk about the different types of debt you might encounter as a young adult. The most common forms of debt are student loans, credit card debt, and car loans. While these may seem intimidating, they can also provide opportunities for growth and financial stability when used strategically. Let's take a closer look at the different types of debt you might encounter as a young adult. Understanding these types will help you make informed decisions when it comes to your financial planning. The first type of debt we often encounter is student loans. Many young adults pursue higher education, and student loans can be a valuable tool in making that dream a reality. However, it's important to be mindful of the amount you borrow and the interest rates associated with those loans. Make sure to explore all available options, such as scholarships, grants, or part-time work, to minimize the need for excessive borrowing. Another common form of debt is credit card debt. Credit cards can be incredibly convenient and offer rewards and perks, but they also come with the potential for high interest rates. It's crucial to use credit cards responsibly by paying off the balance in full each month or keeping the utilization ratio low. Accumulating high credit card debt can quickly become overwhelming, so it's important to exercise caution and restraint. Lastly, let's discuss car loans. Many young adults need reliable transportation, and car loans can help make that possible. However, it's important to consider the total cost of the loan, including the interest rate and the length of the loan term. Shop around for the best rates and aim for a manageable monthly payment that fits within your budget. Remember, a car is a depreciating asset, so it's essential to strike a balance between your transportation needs and your overall financial goals. So, as you can see, these are just a few examples of the types of debt you may encounter as a young adult. By understanding the specific characteristics and implications of each type, you can make informed decisions and use debt as a tool to support your financial goals. Now let's delve deeper into the concept of good debt versus bad debt. Understanding the distinction between the two is crucial when it comes to making sound financial decisions. Let's start with good debt. Good debt can be considered an investment in your future. It typically involves borrowing money to acquire assets or investments that have the potential to grow in value or generate income over time. One common example of good debt is student loans. By investing in your education, you increase your knowledge and skills, which can lead to higher earning potential and better career prospects. Another form of good debt is a mortgage. Buying a home is often one of the most significant investments individuals make in their lifetime. While it involves borrowing a large sum of money, the value of the property has the potential to appreciate over time. Additionally, owning a home provides stability and the opportunity to build equity. On the other hand, we have bad debt. Bad debt typically refers to borrowing money for non-essential items or things that depreciate in value. High-interest credit card debt is a prime example. When you use credit cards to make purchases that you can't afford to pay off in full, the interest charges can quickly accumulate, making it difficult to get out of debt. Another type of bad debt is borrowing to finance a luxury car or other depreciating assets. While having reliable transportation is important, purchasing an expensive vehicle that exceeds your budget can lead to financial strain. Cars, unlike homes, generally lose value over time, and high monthly payments coupled with high interest rates can quickly become a burden. It's important to note that not all debt falls neatly into the categories of good or bad. Some debts may have elements of both, and it's essential to evaluate the specific circumstances and potential outcomes before making a decision. When considering whether to take on debt, ask yourself these questions. Will this debt contribute to my long-term financial well-being? Is it an investment in my future or just fulfilling short-term desires? Can I comfortably manage the debt repayments within my budget? By carefully weighing these factors and understanding the potential benefits and drawbacks, you can make more informed decisions about when and how to use debt as a tool in your financial planning. Now, let's dive into the smart strategies you can employ when using debt as a tool in your financial planning. Firstly, it's important to borrow only what you need and have a clear plan for repayment. Secondly, consider the interest rates associated with the debt you're taking on. Lower interest rates can save you money in the long run. Additionally, always maintain a good credit score, as it plays a significant role in obtaining favorable interest rates and loan terms. Negotiating with banks and other debt-issuing entities can be a powerful way to ensure fair rates and loan conditions. In this segment, I'll share some valuable tips to help you navigate these negotiations and secure the best terms possible. Firstly, it's important to do your research. Before approaching any institution, gather information about current interest rates, loan terms, and any special promotions or offers available. This knowledge will give you leverage during negotiations and help you make informed decisions. Secondly, be prepared to negotiate. Remember, the terms presented to you are not set in stone. Don't be afraid to ask for a lower interest rate or better loan conditions. Be confident and articulate your reasons for requesting improved terms, such as a strong credit history or competitive offers from other institutions. Thirdly, emphasize your value as a customer. If you have a good credit score, a steady income, or a long-standing relationship with the bank, make sure to highlight these factors. Institutions often value loyal customers and may be willing to offer more favorable terms to retain your business. Additionally, consider seeking out assistance from a financial advisor or credit counseling agency. These professionals can provide guidance, negotiate on your behalf, and help you navigate the complexities of debt agreements. Their expertise can be invaluable in ensuring you get the best possible deal. Lastly, always review the terms and conditions thoroughly before signing any agreement. Understand the interest rates, repayment schedules, and any associated fees. If something seems unclear or unfair, don't hesitate to ask for clarification or request modifications to the contract. Remember, you have the right to understand and agree to the terms that work best for you. Armed with these negotiation tips, you'll be better equipped to secure favorable rates and loan conditions that align with your financial goals. Now, let's move on to our conclusion and wrap up our discussion on the smart use of debt in financial planning. And there you have it. We've discussed the importance of financial planning, the different types of debt, and how to use debt smartly to build a secure financial future. Remember, debt is not inherently bad, but rather how you manage it determines its impact on your life. If you found this video helpful, don't forget to hit that subscribe button and click the bell icon to receive notifications whenever we release new videos on personal finance, budgeting tips, and much more. Also, feel free to leave a comment down below with any questions or topics you'd like us to cover in future videos. As always, thank you for watching, and I'll catch you in the next video. I'm Chad GPT and I hope you stay rich, brother. Watch this other video to stay ahead in the financial game.